Okay, so India left interest rates unchanged at 7.25%. The rupee lost 1.8% against the dollar in its deepest plunge in more than a month. For more on this, we're joined by Anil Gupta, the chair in global strategy and entrepreneurs at the Smith School of Business at the University of Maryland. Thank you so much for joining us, sir.
Pleasure to be here, Michelle.
Thank you. So what are the factors behind the declining rupee?
I think the single biggest factor behind the declining rupee is the current account deficit. That's number one. And second, of course, as the U.S. Fed begins to tighten the easy monetary policy, money is flowing back from emerging markets back to the U.S., which means that money isn't flooding into India. And if money isn't flooding into India, the rupee is no longer in the demand that it was, and so the rupee becomes weaker. So I think it's the trade deficit, which leads to current account deficit. That's number one, and then the U.S. Fed policy.
Well, it's interesting that you mentioned the U.S. because the rupee hit a record low, 61 to 21 to the dollar on July 8th. That's when the Federal Reserve hinted that it may start to wind down the stimulus. So explain the connection between what the U.S. Fed does with regards to its monetary policy and how that impacts the rupee's value.
Yeah, I mean, actually, I'm not, looking just, for example, at the last month, because in the short term, there can be a number of factors that can cause fluctuations in currency valuations. But if you look, for example, from the beginning of this year, if you look at, the last 6-9 months, in general, in fact, emerging market currencies have been dropping, and India, of course, has dropped significantly more than most other big emerging market currencies. And actually, it's during this particular period that the Fed has indicated that it will start tightening, in fact, the monetary policy in the United States. But still, I don't think that's the big factor. Really, the big factor behind the fall of the rupee, the depreciation of the rupee, really are internal problems within India, which have to do with trade deficit, which leads to a current account deficit.
Well, the RBI on Tuesday also lowered its forecast for India's economic growth for the current fiscal year to 5.5%.
That's right.
From 5.7%. What's your take on this?
Yeah.
Is there hope to get further growth spurred?
I think, yes, there is hope. But, just to, in fact, look at what the Reserve Bank apparently is trying to do, is that it's trying to balance three different considerations. And it has to really decide what the priority should be. And I think it has chosen the right priority. But the three considerations are the chosen priority right now, which is the current account deficit. Number two is inflation. Inflation right now in India is fairly low. I mean, meaning 4.8, 4.9%. And if you look at the last 2 years, it's actually come down significantly from an inflation rate of about 9%. So inflation is not as big a factor right now. But the third factor that the Reserve Bank always tries to keep in mind is economic growth. And the economic growth has slowed down. But I think right now, for very good reasons, the Reserve Bank is focusing on the current account deficit and the value of the rupee. But in fact, the Reserve Bank governor in his statement today already hinted that for the rest of the current fiscal year, the remaining 8 months or so, the bank is in fact quite likely to factor in growth considerations, which should be interpreted as a signaling that probably there would be that interest rates may come down over the next 6 to 8 months.
Well, one of the concerns that India has been having is that foreign firms are pulling out of India. What do you think the Indian government can be doing to get more foreign investment?
Yeah, I think, if we look at foreign firms pulling out, we saw the two steel companies, Arcelor and POSCO, announce essentially cancellation of 2 projects. But they hadn't sunk in a whole lot of money in those 2 projects, so that was more essentially a change in intentions. But still, one would look at that as pulling out. I think the big problem in terms of FDI in India, and I should add that if we look at FDI to GDP ratio, incoming FDI to GDP ratio in India, it's very low. It's lower than Brazil. It's much lower than China. So India does face, and I think what it is that while the central government policies actually have become increasingly more friendly to multinational companies, inbound FDI, but the bureaucracy and the red tape is a nightmare. And it's a nightmare at the central level, but it can become even worse at the state level. So I think, there's clearly both matter. You do need good policies. I think the policies are getting better and better.
Right.
But you also need, in fact, the ease of doing business, on which India doesn't come out looking very good.
Bureaucracy. That's a very good point. We're going to have to leave it there. Thank you so much, Anil Gupta, the Chair in Global Strategy and Entrepreneurship at the Smith School of Business.